Hello everyone, in this video I'm going to show you how to trade the ICT silver bullet model, and I think you are overcomplicating it, so let me show you how you do it and how you can easily do it every single day to have a more simple analysis, and you will get how powerful this model is inside the market. The main thing that we're going to focus on is the Asia session. Asia session is going to guiding us deciding which kind of setup we're going to look for the day, and it's going to be very determinant. That's why I simplified it, because there are many questions about how to determine the bias, what setup to look for, and just by understanding and putting a simple rule toward your Asia session, you will see how it's more easy to determine your overall analysis and your whole overall direction. So the main thing that we're going to focus on is that if Asia is a strong point or not. A strong point is basically a QM. If you don't know what it is, let me break it down for you. A QM is basically when we have price, for example, in case of a low, to run a liquidity from the downside and then take a structure to the upside. If you're familiar with the buy side and sell side liquidity concept, in this case, you'll simply need price to take out the sell side liquidity and then price to take out the buy side liquidity, confirming our low. And that's going to be our strong point. That's going to be determining lows. We also call it strong low simply because it's more clear for us, and same as the strong low, we're going to have what we call a strong high. That's simply when we have price taking our liquidity from the upside, that will be buy side liquidity, and then breaking our structure to the downside. That will be sell side liquidity. So those are the two formations that you have to focus on. And you're gonna look to them only to the high and the low of the Asia session. We don't care of what is inside, we only care about what is outside. And that's how our overall process is gonna become more clear, more that we break down to the video. So this is gonna be your first scenario, is that the Asia high or low is at a strong point, and that's gonna be extremely determinant for us. If it's not, we're gonna come to the second scenario. That's basically when the Asia high or low is liquidity. And as type of liquidity, we just have normal highs and lows, same as equal highs and also trendline liquidity that can be formed inside the market. And those are gonna be our second scenario. Now let's break down on our model and how they consist and how we can actually use this kind of information to determine which kind of set we have to look for inside of a day. If the Asia high or low is a strong point, we're going to anticipate price to come and test it out. So we're going to look to our key area right here to take a short in case the Asia high will be a strong high and the market will be bearish. If we have a strong low inside the market, we're gonna expect it to be tested, obviously, if you're bullish. Now, if the price makes a strong point, but you're going on the opposite direction, what's gonna happen is the market is gonna stop you out simply because you have the wrong direction. That's why mastering the bias is extremely important. All right, guys. So that's what we're gonna be expecting. In case of the Asia high or low is just liquidity, what we're gonna be expecting is the price gonna run and take them before reversing. So let's say that we are bearish and we have the Asia high that is just liquidity, in this case equal highs and also channel liquidity. You're gonna expect price to come, run above them, and then drop. And that's gonna be your main setup. So right now, every single time that you have a bias, you only be available to get only two setups. The first one is that if your Asia high is strong, and the second scenario is if not. Same as if you're bullish, we're gonna have the low that or is strong. That means it takes out liquidity and break a structure, and that's gonna be option number one. And the option number two will be that the Asia low is no liquidity. So let's say in this case, it just equal lows. And what's gonna happen is on our first scenario, price gonna test our strong low on our key area and then reverse. And then on the second scenario, we're gonna see price running below Asia and then reverse. And those are the only setup we're gonna take a look. And as you can see, it's something extremely simple, but also I'm gonna give you guys the rules to look to timers because we're not gonna look to any other time frame. That will be extremely confusing because if you go on the 1 minute, you will see that the Asia high is strong on every single time frame. We're gonna use only the 50-minute to determine if our Asia high or low is it a strong point. So for example, let's take a look right here. What we can clearly see is that on the 50-minute, as we are right now, the Asia low is a strong low. And as you can see here, it takes out a low, also known as sell side liquidity, and takes out a high. That'll be our buy side liquidity and also structure. Now here, we are on the expansion of a bullish market structure, so we're gonna be bullish. And now the only thing that is missing is to mark up our key area inside of the market. In this case, we can go up to our 4-hour time frame right here. That will be a way too higher time frame in this situation. I recommend you to start always from the 4-hour time frame because it's where you should be starting. Don't go for the daily, obviously, because you're gonna see the candle still forming and we're gonna select only key areas from already closed candles. So we're gonna go down to the 1 hour. And in this case, what you can see is this unmitigated wick right here. All right. Then we have to drop and just make sure that we have a liquidity fitting into it. And in this case, as you can see, we have those two equal lows feeding into our key level. And now this is the very interesting part. You can see how the market is accurate. Now, not always the market is going to tap us perfectly with this. Sometimes the market is going to drop a little bit, but what you're going to see mostly applying this concept is the price is going to test at your key level and then instantly reversing. So what we can do right now, after also we place our timing down on the chart, is just take our long right here, place our stop loss few pips below. Let's say we run to 1.5 pips, let's say right here, and we run our target to our closest buy side liquidity. We can also go to aim to our overall high right here, expecting a more bigger trade. And you will see that the market is just gonna move to it. All right. But let's say that, for example, we just aim to our closest range equity that's already up at 104. And that's going to be a lot amount of money if you manage a good funded account. And as you can see now, our analysis became extremely simple inside of the market. That's because we have to look for if market is bullish or bearish, and then we have to focus if the Asia low or high, is it a strong point or is it just liquidity? And this is the most powerful setup that I use every single day in SEM analysis, and that's the model that made me founded and achieve me profitability. And that's why I do recommend it too, because it's something it's very stress-free, it gives you a lot of performances, and it's something that you can take very easy inside your trade. Even though you're working your study or dedicating full time, you focus on one main setup that you know is working and has an extreme a high edge into the market that gives you a very high risk redeem and a very good win ratio. And you have just to take it and let it play out and build your edge inside the market. So let's also go to see this setup right here. Obviously, we were on a bullish market, and as you can see now, the Asia low is not liquidity, but it's just a trend line liquidity, as you can see. So what we have to do right now is just to find our key area. Unfortunately, even on the 15-minute, here everything is mitigated. And you don't want to take a key area that is very far away from price. Why? Because the manipulation is a very quick and fast move. As you can see, the market just gonna take few pips below it and then reverse. So if you take a key area that is very far away, so for example, let's say you take this order block, price is not gonna come right here. Why? Because it's too far away from it. So in this case, what we're gonna do, we're just gonna drop on a time frame and let's see what we can find right here. And the closest key area to this Asia low is this unmitigated wick right here. So what we could do is just place our risk redeem right here. We can run our stop loss. We can even place it below this low and aim to our Asia session high liquidity. Then in this case, gonna be also our buy sell liquidity, and we will get our 103. What you can do is also scalp inside all those ranges following just the market structure, looking to buy side and sell side liquidity to get taken. I prefer using the ranges. That is the main strategy I use. That is very familiar with buy side and sell side liquidity. If you're struggling with buy side and sell side liquidity, I suggest you to learn ranges. This is the way that I trade and the way that made me profitable. And it's extremely simple. And the most powerful thing is that it's based on rules. So you don't have to try and guess every single time which buy, sell, sell liquidity, and also which kind of area price is gonna come. All the analysis looks exactly like the one they did, but you can also apply them on every time window on the chart, just using ranges. That's simply my simplified version to look to buy side and sell side liquidity on an ICT perspective. So if you're interested in learning it, make sure to check the link in the description. You will find my community where I also do coaching calls 6 times per week where you're gonna get coached directly by me. And we also get a program to get you funded in less than 90 days learning this simple strategy. It's something extremely simple. It doesn't matter your experience on the market. We just go straight to the point to get you funded as soon as possible in order to make you pay out and succeed as much as possible.